The house of Tata is stronger than ever, and one of the heavyweights of the Tata Group is Tata Motors. This company is in a dominant position in many segments. Commercial vehicles, passenger vehicles, electric vehicles, luxury cars. It is the only stock from the Nifty 50 which doubled investors' money in 2023. That is too much price appreciation in a very short time. So what should investors do now? Let's find out. Namaste and welcome to Retail Investing. Let's have a look at the chart. The current market price is hovering around 780. The RSI of 70 plus indicates heavy momentum in the stock as of now. These high buying volumes point towards institutional buying, and that explains the 70 plus RSI. When it comes to the financials, some of the numbers are a little bit worrisome to me. For example, the debt is extremely high at 1.27 lakh crores with a debt to equity ratio of 2.38. Tata Motors recently sold a big stake in Tata Technologies, and that's why the Tata Tech IPO became possible. I'm sure this selling had something to do with Tata Motors' debt levels. The stock has more than doubled in 52 weeks, and it is trading at a price to earnings multiple of 17.9. It seems low compared to the industry PE, but this peer comparison does not seem valid to me. And that's because the main competitor is Mahindra & Mahindra, and Screener has totally forgotten about them. So why am I saying Mahindra is the main competitor? Well, it's because both companies are famous for making SUVs. And whenever somebody recommends you to buy a Harrier or a Safari, the first question that comes to your mind is why not an XUV 700 or a Scorpio N? Now, if you look at the financials of Mahindra, you can see that it is trading at a price to earnings multiple of 19.1. which is higher than that of Tata Motors. That is good news for Tata Motors. So here is the profit and loss statement, and it looks a bit surprising to me. If you have a look at the numbers from the last 10 years and 5 years, nothing was happening. Sales growth was very poor, but out of the blue, we have a 33% growth in the last 12 months. And the profit growth is just unbelievable at 269%. This should explain why the stock has doubled in the last 12 months. The automotive industry is classified as a cyclical industry, which means we cannot expect consistent growth. Now, most of the financial and business analysis that we come across are actually from the advanced economies, which are from North America and the European Union. If you have a look at the cars per thousand data, you will see that for USA it's 980, which means 980 people out of every 1,000 people own a car. For UK, it's 850 cars per 1,000 people. Now, this is the reason why the auto industry behaves like a deep cyclical in these countries. So what happens is people buy cars, their friends and families get impressed with their new cars, but 5 to 7 years down the line, nobody is impressed with their old cars anymore, so they buy new cars again. The market is saturated and there are no new people to buy a car for the first time. Hence the sales fluctuate and it is a deep cyclical industry over there. But in India, it is a completely different story. The cars per thousand figure in India is only 22. This means very few people have cars and the industry is in its infancy. The majority of cars which are going to be sold in the next 10 years are likely to be bought by first-time owners. And I'm not so sure if the auto industry in India is going to act like a cyclical. So here are the sales figures of Tata Motors again. I cannot see fluctuation in sales as it happens with cyclicals. As you can see, from 2012, there was consistent, although not impressive sales growth until 2029. Then during the pandemic, the sales went down. As of now, Tata Motors is clearly the market leader of the EV industry with a market share of more than 70%. Another subsidiary of the Tata Group, which is Tata Power, has been building most of the nation's charging stations. This could give an edge to Tata Motors over other EV companies. The Jaguar and Land Rover segment is doing well these days and generates more than 60% of revenues for Tata Motors. If in the future the government decides to reduce taxes for luxury cars, Tata can have an advantage over companies like Audi, BMW and Mercedes in the domestic market. So in the long run, I do feel bullish about Tata Motors. But in the short run, the highest price target that has been given is around 840. So please be careful about that. For any automotive company, there are two main ways to grow. Option 1 is to take away customers from the competitors by better pricing. And option 2 is to take away customers from competitors by providing better quality. Whether cars made by Tata like Harrier and Safari are about pricing or quality, please let me know in the comment section. And also remember that a boom in the SUV market has just begun. Now, Tata Motors also has some weaknesses. As of now, more than 60% of the company's revenues come from the Jaguar and Land Rover segment, which mostly sells in the international market. Growth in the domestic market is something that the company should definitely focus on. The second and the biggest weakness of Tata Motors, in my opinion, is the lack of good marketing. So this was my understanding of Tata Motors, and please let me know in the comment section what do you think of this stock. Thank you for joining, and I'll see you soon. Jai Hind.